Hello, and welcome to today's podcast. Today we're going to talk about how to pick the right private equity firm to invest with. Private equity firms have become major players in the investment world, but with so many firms out there, it can be difficult to know which one to pick. In this podcast, we will discuss different strategies that will help you to choose the right private equity firm to invest with. First, let's define private equity. Private equity, in a nutshell, is investment capital that is not listed on a public stock exchange. A private equity firm is an enterprise that pools capital from high net worth individuals, institutions, or pension funds to invest in a variety of businesses. These businesses can range from early stage startups to established companies. Private equity firms typically invest in companies that need capital to grow or for acquisitions. So how do you pick the right private equity firm to invest with? First, research the performance of private equity firms using the best tools possible. You can start by exploring peer group comparisons. There are a number of indices that are available online that you can use to evaluate private equity firm performance. By conducting your due diligence, you can select firms that have a strong record of successful investing over the long term. Secondly, look beyond the numbers. While past performance is important, consider other factors that might indicate a good private equity partner. Get to know the firm's management team and gauge their level of involvement in the investments. This can provide insights into the level of scrutiny and oversight applied to portfolio companies. Thirdly, evaluate the private equity firm's investment strategy. Ideally, the firm should have a clear investment thesis that aligns with your investment objectives. Questions to ask include: is the firm's investment style complementary to your own? What is their underlying approach to adding value to portfolio companies? Fourthly, determine whether the firm has independent governance. In order to ensure that investor interests are aligned with those of the management team, a private equity firm should have independent oversight. This can take the form of an advisory board, investment committee, or other regulatory structure. Finally, assess the fees both directly and indirectly charged by private equity firms. While performance fees are an appropriate way to reward success, it is important to ensure that fees are transparent and reasonable. In conclusion, by using these tips and conducting thorough due diligence, you can pick the most appropriate private equity firm for your investment objectives. Thank you for joining us today. Stay tuned for more informative podcasts.